So the fabric giant Joann
¿Y otra
Fabrics
vez?
is going out of business.
¿Otra vez?
It's closing all of its stores. That's about 800 stores that are going
Vale.
to be closing. It's pretty crazy to think a company
¿Y otra
that
vez?
big can file for bankruptcy and close down all its stores. It's been one of the biggest U.S. retailers of fabric and craft supplies. It has about 800 stores across 49 states across the US. It's over 80 years old, and it's been struggling for several years, since the pandemic. The pandemic definitely brought the store down. Um, a lot of competitors have affected it, such as Hobby Lobby, Michaels. The problem becomes a lot with Joann Fabric. When you're that big, things don't go good. It's hard to recover. This is the second bankruptcy that they're filing. So right now, they'll probably get sold. They're going to start to liquidate their assets. Their gift cards are going to be honored through the end of the month. So February 28th, your gift cards are going to be able to be accepted. But other things like their partnership discounts, Girl Scouts teachers, all these other relationships, they won't take any returns. Their debt has been ballooning. Uh, their debt has been ballooning, and that has been really caused an issue. So one of the things you'll notice is when a company's debt gets too big, they can't really recover from it. And companies this big, if you consider a ballooning debt for a company of this size, they would have to do some amazing sort of restructuring, or they'd have to have some massively profitable months or years to really overtake that. In an inflated economy, a lot of these companies cannot survive a massive ballooning debt or a huge legal suit that causes them to have to pay back restitution. So right now, Joann Fabrics is looking for a buyer and wants to close about 60% of its stores. So it is up for sale. Anytime a company goes bankrupt or closes stores, it's also a for sale sign that all those stores and locations are going to go up for sale to the highest bidder. So if you do need space in Joann Fabric stores, something of that size, it can be an opportunity for you to get that store at a strong discount. The average IRS tax refund is about 32% lower this season. So that's kind of a big surprise to a lot of people. So right now, the average was about 2169 as of February 4th. It's down from about 3207 about 1 year ago. However, this filing doesn't include the refunds from Earned Income Tax Credit or Child Tax Credit. Those aren't issued before mid-February. The previous year's filings included claiming these credits. The value of these tax breaks can be substantial. They can even result in five-figure refunds in some cases. Typically, you can expect a refund when you overpay taxes through the year by your paycheck holdings or your quarterly estimated payments. By comparison, there's generally a tax bill when you haven't paid enough taxes. The average refund is currently smaller historically. Filing season numbers even out as more tax returns come in, according to the agency. On February 14th, the IRS received about 33 million individual tax returns, of the more than 140 million it expects before the April 15th deadline. As of December 2024, the average tax refund for the 2024 season was $31.38, and that's compared to $31.67 in late December 2023. The latest filing statistics come after the massive layoffs for the agency. So this was all done by Elon Musk's government Department of Government Efficiency, or DOGE. So it's continuing to cut the workforce. It's not clear how exactly this staff reduction will impact future taxpayer service, but experts, they recommend you double check the returns for accuracy so you don't have any delays. Calling the IRS looking for your refund is not really going to help. They're not that responsive. But typically you're going to get your refund within 21 days of filing your return. So as far as we know now, it's still working pretty well. You still have I think the filing date is April 1st, or the last filing date is April 15th. So one of the things you have to think about is start getting your paperwork together so you can try to file it. A lot of these offices are going to be pretty busy. Even though they accept tax returns from January 27th, you have all the way till mid-April to do it. And if you file your return electronically and do direct deposit, you can usually receive your refund within 10 to 21 days. So there's been a lot of layoffs due to Elon. So a lot of people are expecting that the IRS is going to lay off thousands of probationary workers in the middle of tax season. So there's about 2 different sources that are stating this. And if you mail returns, and if you want your returns to be mailed in, it can take between 4 to 8 weeks for processing. And that's a much greater time compared to direct deposit. Also, claiming the earned income tax credit or the additional child tax credit, it can result in a longer processing time, as the IRS needs to conduct additional verification. Typically, refunds involving these credits are issued by the end of February. And also there's a peak season. During this peak season, particularly from late March to mid-April, can delay your refund because the high volume of returns being processed. So you can go to an online tool, it's called Where's My Refund, to check the status of your income tax refund. That tool is updated once daily overnight. So you're going to need a couple of pieces of information for that: your social security or individual taxpayer number, your filing status, and the refund amount calculated on your return. So try to get all these things together before it gets busy. Try to file your paperwork early, and I know a lot of people depend on those returns at the beginning of the year. The stock market experienced fluctuations. It's been going up and down due to uncertainty, due to the tariffs. Bitcoin itself has crashed under 90,000. That'll cause the stock market also to react negatively. One of the big issues has been the tariffs. So these tariffs started being implemented by Trump, and they'll take effect in March. They'll affect Canada and Mexico, and they'll potentially might cause what is thought to be a trade war, creating a lot of uncertainty in the market. The S&P 500 has gone down and has recovered, but it is away from its all-time highs. And the Nasdaq contains a lot of tech stocks, and those tech stocks have been taking a hit, but overall the US economy still remains strong. US government aims also to do another possible improvement. They want to tighten the restrictions on semiconductor exports to China, and that in relation caused the tech stocks to drop. So what happened was, due to that news, Nvidia stocks fell about 0.7% ahead of its earnings. AMD and Broadcom also dropped, and the S&P 500 tech sector is going to be taking its first quarterly loss since 2023. And Bitcoin dropping below 90,000. It's a 3-month low, a 4% decline. So when we look at the decline, it's related to the 1.5 billion hack on the Dubai-based Bybit. It really hurt the crypto economy, and generally there is a macroeconomic uncertainty. There's market volatility, and people have gotten away from crypto assets and started going into treasury. So the big money makers do feel that right now it's better to start going into treasuries. Even the Coinbase has declined by 4.8%. MicroStrategy saw a 5% drop. Right now, people are looking to wait for Nvidia's earnings report, which should be good. Chip manufacturers still kind of forced to buy because of AI, and they'll relatively stay loyal to the reliable product. And the S&P is still strong. It's trading near 5,000 points, even though there's so much uncertainty in the market. European markets, they're kind of confused now. Investors are still trying to understand the US trade policies, and the Asian markets are mostly down. And South Korea's Kospi index started to fall after there was an interest rate cut. So there's a lot of uncertainty right now over trade policies, semiconductor regulations, and crypto market stability. The market volatility right now should continue. Investors are probably going to focus more on earnings report, Federal Reserve signals, and geopolitical developments to assess future trends. Palantir stock tumbled. If you were to buy it last year to now, you'd seen almost, I think it's tripled in value. But what's happened right now, it has fallen about 27%. And that's directly related to the defense spending cuts. Despite it's been up about 20% for the year, and it's been trading at 160 times forward earnings. So it's probably way higher than its true value. And a lot of investors right now, they are concerned about the US defense spending cuts under the Trump administration. The CEO, Alan Karp, he has a plan to sell about 1.2 billion worth of shares, and that will further make their investors hesitant about investing in that stock. Anytime you see one of these institutional investors or the CEOs selling their shares, it might be a sign for you also to sell. But overall, compared to last year to this year, this stock is still up 20% in 2025. So is Palantir really worth it? Should you stay in it? If you are in it, it's a very uncertain time, and in uncertainty, most people would advise you to take profits. So you have to decide how long you're willing to wait if this continues to plummet. The U.S. defense spending is almost required, but there is some hesitation when people see the defense spending cuts and there's insider selling. Those are signs that someone knows that it's time to take profits, and it's been at record highs because it's a majority of its investment is through the military. Through the military is where they're getting majority of their sales and majority of their business. Palantir, I think, when we look at where it was almost at $20 and now it's at 80 or 90, you're almost making 4 times your money in a year if you would have made that investment. A lot of investors are thinking that the Trump administrations will cut defense spending, and a majority of its money comes from government contracts. So those are planned to be scaled back or eliminated. And a lot of problems that company does face, even though the company will still survive, their stock increases are really due to potential more than realistic. I don't think the valuation can be legitimately kept if you look at their true earnings. And it could be a situation to short. If you were to short this in the next 6 months to a year, it might start to normalize back into the 20 or 30s. So Palantir right now is trying to develop their artificial intelligence, and they increase their headcount, almost 200 employees, to try and improve their AI part of the company. But everyone's putting their money into AI to try and compete. But who will compete and how well will it affect their bottom line? Still uncertain. What AI really tries to do is maybe speed up some processes, help aid and streamline processes. But a lot of people are hoping that AI will help you decrease your workforce, but that will also lead to higher unemployment. So that's kind of the situation right with Palantir, and people are really hoping that it doesn't really shed this $80 place. But if you were to look at it, it really looks like a bubble has really formed for that stock. So Bitcoin has been finding support around 90,000, but now this week it has tumbled to around 85,000. So this is the lowest point since November 2024. And this is really a big deal because we thought Bitcoin was finding support around the $90,000 mark. But certainly a lot of issues in the American economy with the Trump presidency, US tariffs, and a massive Bybit exchange hack. All these things has caused a lot of uncertainty in the marketplace. Bitcoin is the strongest coin of all the cryptocurrencies, and it will remain to have the most strength out of all the coins. One of the problems that tariffs do to crypto is that the market sentiment does make the coin take a hit. So when President Trump wants to put a 25% tariff on Canadian and Mexican imports, which will take effect in March, it reignited fears of inflation and potential trade wars. And it made investors move to safer assets such as treasury bonds. So when investors start to buy treasury bonds, and treasury bonds are really purchased by the very, very wealthy, it starts to mean the people who are the most experienced in making money are now going to the most safest assets. So these continued tariff announcements and the stance of Trump to protect America is just leading to more and more uncertainty, which causes the majority of investors to move to more safer products. The Bybit hack and the meme coin turmoil in the past few weeks have also contributed to a generally worse impression of the crypto market at the beginning of the year. There's been a lot of coin scams and pump and dump scams, and I think that also makes people a lot more uncertain. It doesn't help, especially because of that big problem we have with a new presidency causing massive layoffs and uncertainty. So there was a Bybit, which is Dubai-based, 1.3 billion hack, right? It's a massive amount of money, and really, when you look at it, Bybit is the world's second largest crypto exchange. It's behind Binance. So the hackers entered an Ethereum wallet and stole the entire contents. According to the blockchain research from Elliptic, it's almost certainly the single largest known theft of any kind in all time. So this kind of massive theft causes huge uncertainty. To know that that kind of theft can be done to your crypto really hurts the market. So markets held up well, even though it did push down from 90 to 85. I think people still feel the prices will recover. But because Bitcoin declined, it caused the other crypto market products to decline also. Ethereum, which is the second largest cryptocurrency, fell by 9.5% to 2386. So other altcoins, Dogecoin, Solana, Cardano also have suffered losses about 20% in the past week. So Apple is going to be spending about $500 billion in US investments in the next 4 years. So they're going to make a giant factory in Texas for artificial intelligence servers, and they're going to hire about 20,000 research and development jobs across the country. So this will be including many purchases from US suppliers to US filming of television shows, movies for its Apple TV. They really haven't said fully what they're willing to spend in the US, but they plan to do a lot of investment with firms such as Corning, which makes the glass for the iPhones in Kentucky. So Apple CEO Tim Cook met with Trump last week. Many of Apple's products were assembled in China, so those could face about 10% tariffs, which was imposed by Trump earlier this month. The iPhone maker did secure some waivers from China's tariffs during the first administration, so they're going to probably try and ask Trump for some sort of waiver, but who knows if that will get done. So Apple itself has committed to spend about $150 billion per year in the United States, and that includes capital expenditures and goods sold. So they need about 3 to 4 years to meet that obligation. They made similar announcements in 2018 during the first Trump administration. And at that point, they said their new and ongoing investments would contribute about $350 billion to the U.S. economy over 5 years. Still, the shares are up 1.2%. And so Apple, I think it has been shown that they're a little bit safe from this uncertain economy. But again, we see tariffs are affecting a lot of these companies' profitability and ability to get these chips from their Taiwan semiconductor factories. So when we look at most of Apple's consumer products are assembled outside of the US, and many of Apple's components are still made there, including their chips from Broadcom, Skyworks Solutions, and Qorvo. So they do have a factory in Arizona, but it's owned by Taiwan semiconductor manufacturing company. So another issue, what they wanted to do, there is a CHIPS Act to improve the US semiconductor production, and that's one of Trump's biggest policy moves. So Apple wants to work with Foxconn, formerly known as Han High Precision Industry. They want to build a 250,000 square foot facility in Houston. They're going to assemble servers there that will power the Apple Intelligence, its suite of AI features. And that's kind of what they're trying to get going. And Apple also wants to increase its advanced manufacturing fund from $5 billion to $10 billion. With part of the expansion is going to be a multi-billion-dollar commitment from Apple to produce advanced silicon in their Arizona factory. They didn't disclose their deal with TSMC, but in the past, it has used the fund to help partners build out infrastructure that need to deliver products or services to Apple. Apple will also open a manufacturing academy in Michigan, where its engineers and university staff will give free courses for small and mid-sized manufacturing firms in areas such as project management and manufacturing process optimization. So Berkshire Hathaway shares have rose to a record on Monday. This is Warren Buffett's conglomerate. It's posted its highest ever quarterly profit. It's driven by improvement in the insurance operations. So Berkshire Hathaway has a large investment in insurance companies, and we all know those insurance companies, they will rather not do their claims so they can keep their money and increase your rates. Insurance itself is almost an obligation by many sectors. So if you open an insurance company, if you're Geico, Progressive, or an institution, you're gonna get business. People are forced to get insurance. every person who holds a mortgage is required to have insurance. So Berkshire Hathaway's Class A shares were up at about 4% to about 28,000, and those their shares have been at about 747,000. It's even reached 755,000. And Berkshire does have a Class B shares. Those closed at $19 or 4.1%. Their market value right now is at 1.8 trillion. So Buffett's fortune right now is about 155 billion. He's about 6th worldwide according to Forbes magazine. So Berkshire on Saturday said fourth quarter profit from its 189 operating businesses rose 71% to 14.53 billion. And their currency gains totaled 13.38 billion, exceeding analyst forecasts in a market where other companies have not been able to do so. In a market where other companies have not been able to exceed forecasts at this rate. So their full year operating profit was up about 27% to 47.44 billion, also another record. And then they had another 334.2 billion of cash and equivalents, mainly in treasury bills. Their cash doubled in 2024 as Berkshire reduced its investment in Apple. It's still the largest common stock holding. Net income, including gains and losses from stocks, was at about 89 billion. So Buffett and Berkshire outpaced their expectation, and this is all due to their saying as Geico improved the car insurers underwriting while cutting costs. So Geico more than doubled their profits in 2024, and it got rid of almost 2,300 jobs in addition to 7,700 in 2023. So by firing people, they increased their profitability. What a surprise. So there you have it. Berkshire is still making great decisions even though they got rid of Apple. If they would have kept Apple, which is doing spectacular still, they would be even way more profitable. Berkshire also owns railroad, energy, industrial, retail, and services businesses. That fund owns a lot of different businesses, and when you get to that size, it's pretty amazing what they've been able to do in these uncertain markets.